Good morning. This is Mike Youngman, Chief Investment Officer for Ankerstar Wealth, coming to you with your weekend update. Lots of things to talk about today. Markets were down this week, which is something different from the last 5 weeks. I'm going to go through that. I'm going to talk about one of our investments that actually hedges against the markets going down and show a little graph of how that did. Also get into some of the disruption that occurred in the last day or so with CrowdStrike. And then I'm going to talk a little bit about Ankerstar Wealth and the financial planning that we do. But before I get started, I must remind you that this is a financial education presentation. You must do your own due diligence on anything that you hear within this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. So let me get started. It feels strange to come here after, I want to say 5 straight weeks of being up every Saturday, coming in and saying, hey, the markets are at a new all-time high. And this week, I'm giving you the other side. They don't always go up every single week. That is also one of the reasons why there's a premium for owning stock. If our investments just went straight up, you would own a money market or a CD, and it would just slowly rise at 2 to 5%, something like that, and you would not get these big upsides with ownership of companies. But with this, you get volatility, and as I've said on some of other presentations, volatility is actually our friend. That's how we make these higher premiums. So let me share my screen, and I will show you I don't want to say bad news. This is not crazy. The S&P 500 dropped 2% this week. And of course the media, it's the worst performance since April 19th. So yeah, it's the worst performance in 3 months. The NASDAQ was down 3.6%, and we are definitely tech invested. So that affected us more, snapping a 6-week winning streak. So yes, it's down, and we don't want it to be down, but we were up 6 weeks in a row. And even the Dow actually saw a gain, and that was just due, the Dow's a much smaller index, only holds 30 stocks, and I want to say it was like United Health or just a couple stocks were up, but it drove the Dow to be up. So, did something fundamentally change this week that would shave a lot of value off of Amazon, Apple, Nvidia, Google, Meta? Did that suddenly the thesis of being invested in those stocks change? No, it did not. But there's going to generally be some profit taking, and there's also going to be shifting to other investments that haven't went up as much. So things that are not those top 10 stocks, Mag 7, top 10, whatever, but moving out to the rest of the S&P 500, if you take some money out of those stocks to put in there, guess what? Things shift a little bit. Is there a fundamental reason to believe that those are all much more valuable now? No. There were 2 events that happened in this last 7 days. Obviously the assassination attempt, and since it was just an attempt and did not actually occur, the markets rose rapidly in the first few days of the week. In fact, we hit new highs again. And then, of course, this CrowdStrike that happened on Friday with Microsoft on a release. And I'm going to get to that in a minute. But let's take a look at the market. So this is the NASDAQ, and I'm just showing you the 5-day graph because, I'm not going to show you the year-to-date because that looks great. You wouldn't even, this is hardly a blip. But let's just look at it from a 5-day perspective. It sold off, and you can see that drop. So there's one drop. I'll show you the S&P 500. Looks very similar type drop. And, so the stock market goes down. And I want to say this, it's kind of, what do I do when the stock market goes down? Especially if it's not like a major, we didn't go to war. There's not some major shift. And in this article I pulled up, the first thing, the answer is simple: don't panic. And, I guess I've lived long enough to go through these market downturns or a market selling off in a day or a week. And, what did I do in the past? I just didn't look. It's like I'm not going to worry about it. I know in the long term it goes up. I don't need to look at this stuff every day. But if you have to look, I mean, and I certainly am in the markets looking at this every day, and so is Steve. Um, you know, we don't want people to panic sell. I don't detect that anybody is. Although when you get to a COVID year or 2008, I mean, there is some panic selling. I mean, not this week, um, but one of the highlights there is judging your risk tolerance. And that's one of the jobs, if you have a financial advisor, is to help you determine your risk tolerance. And one question that I always ask clients is, I got to know the percentage that you can take it going down before you're calling panicking. Because if it's only 10%, then we're going to invest your money accordingly. If it's 30%, then we can be more risky and you'll get more return. But I got to know that. We got to figure out kind of that number. And part of it is it's a theory question until it actually occurs. So, when you get in these situations, if, on the year you've been up 15% and all of a sudden it drops 5%, does that cause you to lose sleep? And if so, you should talk to your advisor and adjust your portfolio accordingly. We do not want to cause you stress. So another item on here, obviously diversifying your choices. And that leads me into diversification. So one of the moves that we've been making across our models is to add in some buffered ETFs. And so what that means is when the stock market goes up quite a bit, it might not go up quite as high. But also when it goes down, it doesn't go down as low. And we just buffer it. Not a full part of the model, but a piece. And what I wanted to look this week is how did one of our ETFs do? So I'm going to bring this graph up. And what this is an ETF we use called Buffer, B-U-F-R. And you can see that the S&P went down 2.6% in the 5 days. You can see that purple line that drops. But our ETF only went down 0.9%. So and it's just a piece of a lot of models. So if you are looking at your model and you say, well, it went down too. Yep, it did. It definitely went down. But it did not go down near as much. And that was the purpose of putting that in, and it's still in there. And we may increase that as we go into, possible election uncertainty, but, or just even, going through the process. So I just wanted to show that, and that's kind of how we, I'll call hedge against it a little bit. Would someone want to be in this 100%? I don't think so, but it should be part of the model. It's certainly at certain points and times of the year. So Friday, you get up and everything's down. You go down to the gas station and they only take cash. Like, wow, that's like a throwback. I don't even carry cash. I didn't try the bank machine to see if I could get cash out of it. But what caused this? And what it was a CrowdStrike update. And if you think about these software companies, CrowdStrike, which does security, Meta, Google, they are releasing updates all through the day. This isn't the IT world of 20 or 30 years ago when you just had a release every week or two and you had lots of time to test. I mean, I've been in that world and it's a lot of work. These updates are occurring frequently, and especially when you consider a CrowdStrike, Palo Alto, or SentinelOne that are fighting cybersecurity. They're fighting against the bad guys. If they get indications that the bad guys figured out something, they're putting in fixes like as quick as possible, like minutes. And that's how quick things are implemented. Something went in that did not work. It did not coordinate with the Microsoft, correctly. And I'm not saying it's Microsoft's fault or CrowdStrike's. It's probably on the CrowdStrike side. I don't know for sure yet. But something did not work correctly. Now, was it tested? We don't know yet. But when that went in, it caused a global down, outage. Basically, all kinds of things were impacted, from planes to healthcare systems to the gas station. Wow. What really struck me in that, and just, we do invest in CrowdStrike, so, and they've done great, up until this moment. They were added to the S&P 500 a month ago. Been a fantastic stock. You know, it could be one person, it could be a couple people, but you know, it's sad to see. But what really hit me about this is the how fragile things can be when they're all based on computer systems. And if something takes that down, if it's an update, and it happens to be CrowdStrike with Microsoft this time, but you know, next week it could be something else. But how can we pivot so that, you know, work goes on? I can't imagine what would happen if the internet went out for a day. And yet 30 years ago, you know, it wouldn't be that big a deal. But now it's huge. So I know we're going to hear a lot more on this. I'm hitting it today without a lot of knowledge about it, but you know, I'm hoping that we can build a better infrastructure, we, the country, the world, so that things don't go down like that. And the last thing I just want to hit briefly is, you know, one of the things that, and this is on the Ankerstar Wealth website, financial planning. There's some different things that we handle. You know, emergency fund management, retirement planning is usually the biggest thing. College planning, but I know with a lot of clients that as I help you open up things, you know, you always want to have that emergency fund in place. So a lot of times we open up that account. So I don't want to ever say that all we focus on is retirement. Although, you know, the majority of the money sits in retirement accounts. So with that, I hope things are back online system-wise. I hope you're having safe travels and your plane schedules aren't too impacted. I know we're going to hear a lot about this over the next few days, and have a great rest of the weekend.